Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. This sheet is a review of the audited financial statements. It takes the audit and summarizes it into 4 pages and then does a couple calculations, which I'll go through with you guys. And then it also is a good way to compare from year to year without having to flip through large audits. So that's why we use this sheet, and we're bringing it to you and trying to help make it more of a tool. So we'll go through the sheet starting in statement of net position. So this is a area specifically from the audit. I'll show you that. As an example, we'll look at total assets. Total assets are listed on this sheet as 1,391,330. So if we go to our audit, we'll see the assets here. Total assets 1,391,330. So these numbers should match up. Excuse me. If we go back to our sheet and move down, we'll see our ending net position. That's the ending net position for June 30th, 2014. So that would be this current year's audit. And then this one is June 30th, 2013. So this is the means of comparing from year to year. So there was a slight increase in net position, which is good. Before we move up to this box up here, we'll move down. This is from the balance sheet, and this should say general fund. There wasn't enough room for general fund. So balance sheet, general fund, current assets, and then balance sheet, general fund. These are the fund classifications. So before I get into the numbers or anything, I will hop back to the audit. The balance sheet is 2 pages after the statement of net position. So 1, 2, here's where it says balance sheet up here. Now again, we do look at these other funds. If there's a debt service fund or food service fund or whatever, we look at those, but for this sheet, we're staying in this column. So here's our cash and other items. As we move down, we'll see our fund classifications. So here's non-spendable, assigned, and unassigned. So here's the amounts. We'll go back to our sheet. And here's our cash, receivables, prepaid. Note the prepaid is $119,146. As we come over to the fund balance classifications, we'll see the unassigned, assigned, and then non-spendable. We'll start with non-spendable because there's that $119,146. And if we look at the definition, is amounts that cannot be spent because they're either not in spendable form or are legally or contractually required to remain intact. So that's essentially, a lot of times prepaids are non-spendable because you've already paid and you can't spend it again, essentially. So there's no restricted amount. That's usually debt service, committed. So assigned is amounts that board intends to use for a specific purpose. Intent can be expressed by the board or by an official or a committee to which the board delegates authority. So there's an assigned amount of $333,000. Then the unassigned amount, which is the amounts that are available for any purpose. These amounts are reported only in the general fund. So here's the amounts here and then the total. So that's a quick summary of those 2 areas of the audit. As we move up, this area provides a quick summary of the total activity during the year. So there's a beginning fund balance, the revenues, expenditures, other financing sources, net change, and then the ending general fund balance. So below that, we have a couple calculations that are derived from these numbers. So the general fund divided by revenue is actually the ending general fund divided by total revenues, and that's 36.83%, which is a very healthy percentage, very healthy fund balance. So general fund less restricted minus restricted divided by revenues does the same thing, but if there was a restricted amount down here, it would subtract that first. So those would be the schools that have debt service. So general fund divided by expenditures takes the ending general fund, divides it by expenditures. The reason why we do both of these is some prefer one over the other. We look more usually at revenues because expenditures can be inflated during the year if there was a capital outlay or something like that. So it's important to look at both of these, and then if one's way off, kind of say, why is that, so it helps you understand the relationship better. So this one is the ending general fund divided by beginning general fund, so that would be this divided by this. If it's above 100%, there was an increase in the general fund balance. If there was a decrease, it would be below 100%. So we see that there was a slight increase in the net change, so that's why it's above 100%. So that checks out. As we move down the sheet, we get to this area. These 4 boxes are a summary of the notes section of the audit. So That section is pretty important, so I took the notes and I wrote them all in the 4th page of this sheet, so we'll get to that. But this is like a numerical table form of that information. So this is blank because this is part of the template. So notes payable is the state aid notes. So if there's short-term borrowing or a state aid note, that's where that's summarized. This over here is usually involving a bond of some sort, a revenue bond, or any other form of long-term debt that isn't a lease. So then down here we have our lease for Mount Clemens Montessori. They have a lease. Here's the total lease amount to the end of the lease agreement, and then this is the payment for the year, and then here's the balance remaining. Again, this is all written in page 4. So over here we have our management fees information. There's the management fees paid during the year. This percentage is not the management fee charge for the year. This is a calculation. I'll show you. It's takes the management fees and then divides it by the total state aid down here. So it's a little bit different in some respects, not always, but some respects it is. Some schools, I mean. So then earned divided by fall 2013 takes the management fees, divides it by the fall 2013 count, which is the corresponding count for this fiscal year. This is the June 30th, 2014 ending fiscal year. So that's just another calculation. Down here we have the total square footage. If this is inaccurate, let us know. We use it in a couple calculations, and these are all formulas, so if this is changed, we'll quickly correct everything. So so that square footage is utilized, and we take our total revenues and divide that by that square footage. Our total expenditures divided by that square footage. Then we have the difference, and then payment per square foot is calculated taking the payment on the lease for the year and then dividing that by the total square footage. So that's where that comes from, and that's rounded, so there won't be decimals on these ones. So if you calculate it and there's a decimal, that's what's going on. These are rounded. So operations and maintenance per square foot, just another calculation with square footage. It takes I'll go down here for a moment. Takes the total operations and maintenance line item and then divides it by the square footage. That's where that's derived from. And then below that we have square footage divided by that fall count. So it tells the square footage available per student. So those are a bunch of calculations. As from year to year, those would be good to compare and see if things changed, ask good questions, and see what's going on. As we move into page 2, this is the general fund comparison. This takes that box up in the upper right hand corner on page 1 that we went through and kind of provides detail about that. So and it lets us compare from year to year. So here's June 30th, 2014, June 30th, 2013, and then the difference. So depending on what you like to look at, if you like to look at the amounts, you can look at the amounts, or you can look at the difference and say, oh, the state aid increased from 13 to 14 by $103,000. So it's a good way to look at things in a quick way without having to get too much into the detail. So as we scroll down, you'll notice all these line items are differentiated with these codes. These are accounting codes. So just to show you what you can do, if you don't ever know what any of these are, you can look them up in the accounting manual. So I'll show you real quick. I took the accounting manual, I put it in Microsoft Word, and then once you do that, you come up here, you push find, you type in what you're looking for. If we were looking for basic programs as an example, you type that in, make sure you're on results, and then you can skim through this document. Now if you try to look up something really broad like instruction, it'll say there's too many entries in or the word that type of thing. You got to kind of narrow your focus, but if you get the right focus, you can then look stuff up. Here's the code number, and then basic programs are instructional activities, including enrichment, designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps, includes pre-kindergarten. So if you wanted to look anything else up, you could. There's a lot of good information in the accounting manual. So if you don't know what any of these are, it's pretty easy to figure out what they are and where these numbers come from. So as we move down the sheet, this should match up to our ending general fund balance in the upper right hand corner again, and then this is last year's numbers for comparison. So excuse me. As we move down, here's our budgetary information. This is directly from the audit as well. This is the original budget, the final budget, and then the actual. So these amounts are directly from the audit again, and then these are calculations based on these numbers. This takes the difference between the final budget and the actual budget, and this takes the percent change from the final to the actual. So just a way to measure things. Then this is a note. I haven't looked at the PDF. I just send the PDF out, but I don't know if this shows up on your sheet or not. If it does, great. But just so you know, we have this little note here that says the original budget is due July 1. So it's important for us and myself and other staff to know that the original budget is due in July, which is before the count date. So it's sometimes there's sometimes a big discrepancy between the two. There isn't as much as with other schools in this case, but with some other schools there are. So excuse me. As we move down, this is another calculation. This takes the total instruction and divides it by total revenues and then puts it in a percentage. So I'll go up and show you that. So this would be this number divided by this number. So that essentially lets you see the trend from year to year. Now it's not absolute because things can change. You know, if you hire a new teacher at a lower salary than for a teacher that retired at a higher salary, that's going to impact that number. But it's good just to see the trend and know to ask the question about it. So Mount Clemens Montessori increased from 41 to 42, and you'll see that the reason that happened is because total revenues only went up by 64, but total instruction went up by 75,000. So that's why that percentage increased for Mount Clemens Montessori. So over here we have revenues divided by fall 2013. That takes the total revenues and divides it by that fall count. And then expenditures divided by fall 2013, same thing. And then the difference, just another calculation. These are all good things to compare from year to year and then just have a discussion about. I just wanted to make sure everyone knew what they were and what they meant and how they were calculated. So as we move into page 3, these are the enrollment numbers. So down to spring 2014, these numbers are all derived from CEPI. Now, before I move on, I don't like just saying acronyms without explaining what they are. So quickly I'll show you. CEPI stands for Center for Educational Performance and Information. There's a lot of acronyms in education, so it's important to share that. And then you could click My School Data, go through a couple filters, and then here's where you could find all this count data. So it goes down to 91, 92. And then the next area is the free and reduced lunch, so you can look up that too if you wanted. So going back to our sheet, these are all from CEPI again. I went through those big spreadsheets. You guys don't have to. And then this is the number I received via Epicenter. It's the unaudited number submitted with the DS 4061 sheet. So that number may change if the audited number is different from that number. So over here we have the percent change from count to count. So spring to fall, fall to spring, spring to fall. So those are for the number people who like to have the numbers. And down here we have the graphical display for those who like to see things visually. So these should be kind of go hand in hand. So that's that. As we move down, we have the free and reduced lunch. Again, these are from CEPI, and these are directly from their spreadsheets. And then over here, this is a calculation that takes the free and reduced lunch count and then calculates it as a percentage of the total fall count. So that's what these numbers are. And then down here we have the count in a graphical display again. So that's that. Now this is page 4. This is the informational piece I mentioned in page 1 about the notes section of the audit. So this is all from the audit, and I tried to put the appropriate page numbers on here. So you see here's the operating lease information, and you recall that the remaining balance on the lease was $2,933,475, and then here's the page number that references that, and then this stands for state aid anticipation note. That's the state aid note. And then that's page 24 again. And then as we move down, here's the management company information. That's on page 17. So if you're interested in looking any of that up, you can, or it's right here for you. There was no findings, which is good. And then BMCC notes, anything that wasn't related to those two pieces I put down here. There's just a little information. And then this calculation, where it says calculation, that's the payment per square foot calculation that I went over on page 1. That isn't always easy to know what's going on with that. So here's the information on what that calculation is if you need to go back and look at it again. This document is reviewed, and then my contact information is albertb@bmcc.edu. I hope this video is a benefit to you, and hope I didn't talk too fast. There was a lot to go over, so hope you got some benefit from it. And thanks for all you do for the children of Michigan. Have a good one. Take care.